Hi traders, welcome to my channel. My name is Farida. In today's video, I'm going to be sharing 3 reasons why you keep getting stopped out and how you can fix it. Number 1 reason is wrongful ideal stop loss placement. Number 2 reason is trailing your stop loss wrongly. And number 3 reason is not taking the maximum amount of profit when your profit target has been reached. Let's hop into the video. For number 1, the first reason is your stop loss is not at a protective low. That's one of the reasons why you can get stopped out. If your stop loss is not at a protective low, you can get stopped out and then price will continue in your intended direction. For instance, this is our break of structure area. Remember what we say in the past, when you draw your break of structure, you find your last bearish candle. In this case, from this entire zone, which area will I say is my last bearish candle? I'll say here's this lowest red candle is my last bearish candle. So I'll map my zone from here to the last candle wick and extend it. So in this case, here is my demand zone. Now for some people that enter quite aggressive, immediately price taps into their zone, they are in. Now people that are entering conservative, they can decide to enter after candle close here. So they might have entered at the break of this red candle here, somewhere here, put their stop loss here and target, let's just say here for instance. So let me delete this first. So now imagine somebody entered from here at this break of candle, and now you drag it. You see that before the final move happens to the upside, they would have gotten stopped out here because their stop loss was directly below the candle. Had it been they had extended their stop loss to this protective low, then their take profit to be a bit higher, they would have been saved. Okay, you see what I'm showing you? This is your protective low. The whole break of structure area should be your mapped protective low. All right, so if your stop loss is at your protective low, you have a greater chance of seeing price play out nicely if you're able to trail it properly. Okay, let me go back to show you what the trade I entered and what I saw. Okay, this is my own trade I entered. What did I see before I entered this trade? Initially I was supposed to enter here at this close of candle, but as price came down, I was able to see a more valid entry. Just so that I won't miss the position, I entered around there. My initial stop loss was actually here, and then I was targeting first of all like a one-to-one. Then as you keep observing it to determine if you should trail properly or you should just exit from the market. So this one is for BTC, and I'm trying to show you why it is needed to put your stop loss at your protective low. All right, the number 2 reason on why you keep getting stopped out would be that you are not trailing your stop loss adequately. Okay, a lot of people will be trailing stop loss by the last candle, but it's more preferable to trail your stop loss using an order block. Okay, when trading, try to use order block to be your next ideal stop loss level. For instance, this is a valid break of structure. Let us draw our last bearish candle. This is our last bearish candle, this red candle. So we're going to draw it and extend it downwards. Now we see price came here to tap our bearish candle, our demand level, and had a close of candle somewhere here. So if someone was entering, they would enter here, let's say here, put their stop loss, give me a moment, put their stop loss here, and their target should be here. ideally. That's the situation. But then, because of fear, some people will decide to enter there. Price is already moving in their favor. They will start trailing their stop loss by candle. Let's say price made this big bullish move here. Their stop loss would be here. Okay, sorry. Their stop loss will be here. Price will make this next green candle move here. Their stop loss will be here. And you see that now, if they had put their green candle there, they would have gotten their stop loss there, they would have gotten stopped out by this red candle. Now they move on. Let's say they put their stop loss in this green candle, or they put their stop loss in this green candle. Price would have moved, done this whole move, and they would have been stopped out in this green candle level here. They would have been stopped out here before price will finally play out nicely to their ideal target. Okay, but now if they had decided to move their stop loss from other block to other block, from other block here, their stop loss will be below here, they will still be safe. Or they had decided to move their stop loss to the next other block, which is this, their stop loss should be below here, they will still be safe before price finally played out nicely to the upside. So in the ideal case, they had entered here, stop loss here, target here, they would have experienced the ebb and flow of the whole market, this upward move, downward move, upward move, downward move, before price finally played out. However, they would have still been following the market at a close level, such that worst case scenario, they get stopped out after the other block, it won't be at a loss. They had gotten stopped out at the other block, it won't be their full stop loss. You get what I'm saying? You need to trail your stop loss systematically. You can't just be trailing it candle by candle, except for, let's say, if price had broken your ideal target. Let's say price had closed above here and you're now trailing it candle by candle. That makes more sense. Let's say after price broke here, your stop loss is here. It makes sense, right? After trading this red candle, this green candle, after this green candle close, you put your stop loss here, this next green candle. It makes sense, right? After this green candle close, you put your stop loss here. Still makes sense, right? After this green candle close, you put your stop loss here. So now, even though price would have stopped you here, you'd have taken this entire move into your pocket. Even though you had not taken this entire move, you'd have been stopped out here, or you'd have been stopped out here. Okay, that is after your ideal target has been smashed. You get what I'm saying, right? Because if you do not do that, you would either be closing your trade prematurely and you start feeling FOMO, or you will be a lot more psychologically unprepared for your future trades. So this it's an easier method to trail the market. You can either trail candle to candle after your ideal target has been hit, or you trail via other block while still waiting for your ideal target to be hit. Okay, the third reason is always remove majority of your money when price hits your ideal target. You can either exit your ideal target 90% or 100% or 80% when your ideal target has been hit. Then you make sure that even though you're going to be in the market, it won't be majority of your profits that are still in the market. Okay, so now this is another situation. For instance, this is a breakout structure. You mark up your last bearish candle. In this case, let's say this red candle is our last bearish candle. Okay, you draw it, you extend it outwards. What do I mean? Let's say you're being an aggressive entry, price immediately enters into your demand zone. You take your entry, valid, close. You enter here, your stop loss at your protective low, good and fine. Your ideal target should be as soon as price breaks this break of structure markups. Okay, because what we're looking for is something like when price enters your zone, you wait for price to take off. Okay, so now in this case we got that price entered our zone. We are waiting for price to break to form higher highs, which it did, and we should be out with majority of our profit at this level. Now some people decide that, oh, this profit is too small, all of that, they want to hold till infinity. They want to hold to infinity. Okay, you want to hold to infinity, that's fine. Let's keep moving and see what happens. Your infinity money will be reversed to zero. Okay, why? Because you decided that your target that you have set has been hit, but you wanted more from the market. Now look at the tricky thing with market. Market will now come and smash your stop loss, and then ideally reverse and take off to infinity. You see what happened here? Price reached your ideal target, you didn't take your profit. You said that, okay, I'll take both your profits and your money, and then reverse. Okay, markets, you have to understand that you cannot predict the market 100%. Yes, people will take stop loss. Stop loss is inevitable. However, if your rules are being met and you get stopped out, it is fine. But if your rules are being met, all criteria are met, and you decided not to take your profit from the market and you end up getting stopped out, the fault is yours, and you have to take responsibility. You have to take accountability for getting stopped out. Okay, so like I said, since you can't predict the market, the next day, the next hour, once your criteria are met, you enter the market. Once your criteria are met, you exit the market and be done. Be satisfied, take your profit and move. Even though it's 70%, 80, 90% of your profit that's out of the market, and you want the rest 10% to just keep floating, whatever happens, nothing is going to shake. The psychology is going to be alright. That's fine. So I'm going to reiterate the 3 mistakes we usually make. Number 1 is you keep getting stopped out because you don't put your stop loss at the protective low. Number 2 is you keep getting stopped out because when you are trailing your stop loss, you don't trail your stop loss at the order block, you trail your stop loss by candle. Okay. Number 3 reason why you keep getting stopped out is you do not take your profit target at the stipulated target area. You wait for price to reach 1 to 10, 1 to 15 risk reward ratio, and then you get stopped out and you wonder what happened. No, when your rule says take your profit target at a certain level, you take your profit at that level to avoid reversals and price still continues in your intended direction. Okay, so overall, these are one of the 3 reasons why people get stopped out. I hope we'll be practicing more so that we will not keep making such mistakes.